Hello and welcome to this Cornerstone Finance Group podcast brought to you by Business News Wales. I'm Gemma Casey, editor of Business News Wales, and in this episode we're going to be looking at the economic outlook for 2026. As we start the year, the economic picture is being shaped by interest rate decisions, easing inflation, and the impact of the UK government's latest budget. With me to discuss what these shifts could mean for the mortgage market, SME finance and borrowing confidence in the year ahead are Haydn Thomas, CEO of Cornerstone Finance Group, and Kevin Morgan, Managing Director of Cornerstone Commercial Finance. Hi both, and thanks for joining me for this episode. Haydn, let's start with you then. So we had a UK government budget in late November, a heavily trailed government budget. Then in December, we had a decision by the Bank of England's Monetary Policy Committee to reduce the bank rate to 3.75%. And even though inflation is still above the 2% target, it's currently 3.2%, the MPC has said that it does expect it to fall back towards target more quickly in the near term. So with that as a backdrop, in your view, what does all this mean for the economic outlook as we start the year?
I think from my perspective, Gemma, going into 2026 in a pretty positive frame of mind for the economy. I'm not sure what impact the actual budget had on that. I think it being so late in 2025, it stalled a lot of decisions and just brought quite a bit of confusion to the market. But I think the inflation forecast from Bank of England decision on rates is actually what gave everyone a bit of positivity, and certainly that outlook on 2026, where they see both rates and inflation going, has built some confidence in there. I don't think the market was as unconfident as some people thought it was anyway, certainly in the mortgage space, but there was certainly some decisions and a bit of home buy-in that was put on hold, I think, for a while. Some decisions were made probably at the top end of the market, which then filters down and has impact at other ends of the market. So yeah, waking up on New Year's Day in a pretty positive frame of mind, and then our friend across the pond goes and arrests the president of Venezuela and takes him back to America to stand trial, and also announces once again that he quite fancies taking over Greenland. I guess those outside factors you can never really predict, but putting them to one side, there's obviously a lot of confidence in the top FTSE firms, and if people investing in those, the way the market is going as well. We're very confident at Cornerstone that it's going to be a positive year, but you never know what's around the corner, really.
Yeah, it's unpredictable times, aren't they? So you've mentioned home buying. Let's look a little bit more closely, Hayden, at the mortgage market. What are we seeing now as we start the new year in terms of home buyer confidence and affordability and borrowing appetite?
I think appetite is certainly there. I think sales are probably still a little bit subdued, but there is such a large remortgage and product transfer market in 2026 that alone will keep the mortgage market busy. I think it's at 1.8 million deals, the most ever, coming off a fixed rate in 26, and predictions that remortgage will be up by 10% and product transfers up by 2% across the year. So there's a lot of activity amongst mortgage lenders in terms of how do they get their piece of the pie. Market share for the top six is fluctuating probably more than it has in recent years. And yeah, there's certainly a little bit of a price war on just before Christmas. So on the back of that rate rise and just before it, there was a bit of a price war on. So I think that's all good for consumer. Affordability depends where you sit in your viewpoint, but mortgage firms, lenders are making it are being a lot more flexible in terms of how they assess affordability and income multipliers. So there's a bit more stretch in the market because salaries have not moved in the same way as property values. So in terms of trying to stimulate that market, I think that, to be fair, the mortgage lenders are doing a really good job.
And do you think we'll see more developments on that as we go through the year? I think that there's an expectation generally among economists that we will see some further reductions in the bank base rate this year. Is that likely to mean even more competition among the lenders, Hayden?
Absolutely. Yeah, without a doubt, it's a key market for all of them. And then for the top 6 providers, a couple of those are obviously fully operational banks as well, but the mortgage business is really significant in terms of their overall P&L and balance sheet. Yeah, I don't see any real change. I think we'll see a softening of rates. I don't think it'll be dramatic because I think they've built in quite a bit already in terms of forecasts and where we see gilt yields moving at the moment in the money markets. But I do think it'll soften, and that'll only get better, I think, for buyers and for investors. As I said, we go into the year in real positive frame of mind. And for those mortgage advisors that look after their clients and are fully embedded with them and really consider their needs, I think it's going to be a huge year, I think.
Thank you, Haydn. Kev, let's look a little bit more at SME finance then. So, we talked at the beginning of this episode about the economic landscape. How are businesses dealing with that? What impact is that economic backdrop having in general on financial planning for SMEs?
I think it's a mixed bag, Gemma, to be honest, depending on which reports you read. I think it's reasonable to say that confidence amongst firms has weakened, with tax remaining a biggest concern. More and more businesses are telling us that they're likely to be raising prices in 2026. Others are saying that now that they have visibility on the current position, taxes and so on, they can at least move forward with some degree of confidence. So it's a real mixed bag, really, depending on which report you read. It is to a certain extent sector driven as well, but in general, people are now seeing 2026 as a year of delivery. They're saying that they've got the ability to make plans. They're aware that there is a lot of capital available at reasonable cost as well for them to bring those expansion plans into reality as well. So in general, whilst weaker confidence than probably would have been 12, 18 months ago, as Hayden has said earlier on, there is a more optimistic tone emerging as we enter into the new year.
And are you seeing, or do you anticipate that there will be any major differences in appetite among businesses across asset finance versus your standard commercial lending or property-backed finance, for example?
In general, we've probably seen over recent years, because of potential tax breaks in asset finance, there certainly would have been more of a play into asset finance in recent years. Some of those tax advantages have slipped away to a certain extent, but what we're currently seeing is demand right across the commercial lending field. So I wouldn't say there is one against the other. That's less subdued at this point in time.
And in terms of the lenders themselves, then, how have you seen the economic climate play out in terms of lending criteria, and what do you think we're likely to see as we head into this new year?
As Hayden has said, it's very much is a positive landscape for borrowers currently, as an abundance of capital available to lend, softening of lending criteria, lending appetite, and also a softening of price as well, in particular across the high street banks, who have seen their balance sheets diminish as the COVID loans have gradually been repaid. Certainly over the final 6 months of 2025, seen a lot more lending appetite from those banks, and also reductions in pricing as well. And that in turn is then driving down pricing across the sector as well. So I genuinely believe that it's a really good time, a good opportunity for businesses to take advantage of availability of capital, softening of lending criteria, and softening of prices, be it on variable or on medium to longer term fixed rate as well.
And how important is it, given the market that we're in, Kevin, that businesses are talking to a broker that might have specialist knowledge or a whole of market approach? And what benefits can that bring for a business?
Yeah, I think it's about having access to a whole of market lending environment, really. So obviously, if you concentrate on a specific lender, they're just going to be able to offer the limited suite of products. Whereas if a business client accesses finance via a broker, then they're going to have access to to the potentially hundreds of lenders that are out there. If I take my current suite of lenders that we've got here at Cornerstone, we currently have agency with 226 lenders across a broad range of funding opportunities. Now, you wouldn't get that by going specifically to a lender. So I think there's definitely an advantage for businesses to approach specialist, experienced commercial finance brokers like ourselves in order to have a funding package that is specifically tailored for their business at the best possible lending appetite and rates as well.
Thank you, Kevin. Hayden, coming back to the mortgage market. So, in terms of the Cornerstone network and the mortgage advisors that are part of that network, you mentioned earlier that there's a huge opportunity around the remortgages that will be up for grabs during 2026. What other opportunities are there for advisors, whether that's in terms of specialist lending or just really sticking close to their clients, I guess, when we are in choppy waters and the economy is fast moving?
I think that is the big opportunity. So the too many advisors, we call them advisors, I'd probably call them brokers in that instance, will focus on that remortgage and fixed rate expiry opportunity, and that'll be their main focus for the year and mindset. But it's actually, what does that trigger in terms of conversations with their clients, and how can they help them, and how can they embed the relationship and move it into other areas? We'll see whether they have the ability and the skill set to move from broker to advisor. Because it really should just be a trigger for a conversation and to make sure that fact finds are up to date, that they know everything that they need to know about the client, about their family, the community they operate in. So there's more referral opportunities out there. Review their protection to see whether they are fully protected, whether there's areas that they haven't covered in the past. Review their basics like their home and contents. Make sure they're not underinsured, which we see a lot in the market, people taking the cheapest deal from a comparison website. And then when it comes to claims time, really, they haven't got the cover in place themselves that they really should have. So the opportunities are endless if you think I want to be the chosen advisor for my client and right at the heart of their life and a client-centric approach to that's what will differentiate you as an advisor. I think it's because there's such a big opportunity on remortgage. There may be quite a lot out there in the market that don't grasp that, but for me, it's a pivotal year for the sector. It's one of evolve and adapt or die a slow death, because next year the opportunity won't be there. So if you're 12 months behind those that have adapted already and are ahead of the game, you're already behind. If you think of yourself as a mortgage broker, then you're probably already behind, because the good firms think of themselves as advisors. And the reality is mortgage protection, specialism, another area that we focus on heavily at Cornerstone, whether that's specialism through advisors within your own firm or for yourself, or whether you use a referral partner. That's another area I think that more firms need to branch into if they are going to grow over the next 5 years. So there's a huge amount of opt-in. The reality is that many operations in the industry are very narrow and have survived these years in that fashion. But if they want to survive and grow and flourish, there's a huge opportunity moving ahead this year and onwards in the market. So yeah, that's probably how I'd sum it up. It's that, do you want to move from broker to advisor? If you don't, you're probably not going to be around.
You've talked there about business growth, and Cornerstone Finance Group itself is, of course, a fast-growing firm, and you were recognised among the top 50 fast-growing firms in Wales in 2025. And part of that growth as well, Haydn, was the milestone of reaching 105 appointed representatives in the Cornerstone network in 2025. Talk to us a little bit about your ambitions for 2026.
Ambitions in the network are, I think, pretty clear on where we want to take it. We've spent the last three and a half years in growing via recruitment of firms and advisors. I think we'll see a lot of our growth in 2026 supporting our appointed rep firms to actually grow themselves. So if we're currently at 112, if we add an extra advisor to every one of those firms, we don't have to go out to the market and recruit firms in ourselves, but we help our firms to recruit and support them then we'd hit our target. So it's an easier way of doing it, in my view. That won't happen because they're not all ready to grow and add, but that certain percentage will. Yeah, and we're kind of trying to move away from numbers in terms of how many advisors we want. 400 kind of probably feels like about where we'd like to get to at the end of 26, but we're not really hung up upon that. It's more around quality. And we want advisors, not brokers. We want people to get the mantra and really understand the opportunity that's out there in the market, that realize if they've got a proportion of their client base who are self-employed, that they've got opportunities there to refer into Kevin's commercial team or go and recruit commercial specialists into their business. They've got asset finance opportunities where company cars, vehicles, very simple example. We're doing the deal. We've done the JV with HH Business Finance, which we announced in the press this week. It's a great opportunity. We launch that into the network probably in a couple of months' time once we've tested the operational efficiency of it with Kevin's commercial team. But that'll be a big opportunity for those people to think, I'm meeting a company director, business owner. I'm going to talk to them about their mortgage and about their protection. I'm going to make sure I don't miss the opportunity on their home and contents insurance, but I'm going to ask them about their business and I'm going to ask them about the vehicle they drive. And all of a sudden, they become the trusted advisor. They become at the center of that ecosystem. And that should be the goal of them all. And for us, that's how we've built the business. And what we truly believe in is if you've got a customer-centric approach and you're looking at it from a holistic point of view, then you don't have to provide all of the advice. But as long as you've got referral partners that you trust to be able to undertake that advice, then you will flourish and you will succeed. So that's more the same strategy, I think, but probably a bit more emphasis on helping our firms to grow and recruit rather than us just bringing more and more firms into the organization.
Thank you. And Kevin, how about Cornerstone Commercial Finance? What are your key aims for 2026?
It's similar to as Haydn has just said there, really. So obviously our goals are going to be interlinked from a commercial perspective, as Haydn has said earlier on. So we're going to actively endeavour to support our existing firms to potentially take on some commercial expertise within their firm in order to service the commercial needs of the regulated advisors within that firm. So it's gradually growing our registered individual network, but through the current network advisor firms, as opposed to taking on independent registered advisors. So it's a supportive strategy around the network side of the business.
And Hayden, I know that we have spoken on this podcast before, and we've seen lots from Cornerstone about the importance of technology and using cutting edge tools to support staff and your network with compliance and so on.
Yep.
Now, obviously, the technological world is really fast changing, and this year AI is going to be a massive focus. For example, how is Cornerstone keeping track of developments in tech in 2026, and how do you think it might continue to evolve in terms of your support?
AI is an interesting one in the industry. I think we look at opportunities and we're testing a few solutions at the moment, which is very much around that interaction with the client and simplifying some of the processes around data collection. We're always on the lookout for and testing products in the market that can help us on the compliance and file check-in, so that we're making sure that our staff are fully engaged and taking away the more mundane tasks wherever possible. But we also need to maintain that accuracy level. Nobody's shown me a digital lending journey yet that people were talking about bringing out in 10 years ago, that it was imminent then and they'd all cracked it, and they haven't, right, in the SME space. So I think where you've got any element of complexity, machine learning is a great thing for processes, and that's where we will implement it. We'll be in file check-in and we'll be in data collection, lead processes, web chatting, that type of activity, which you can, to an extent, automate as long as your jump out point when you need advice and human contact that's the key fundamental. We've all been on utilities websites, and I won't name any of them, but on some of the TV subscription channels, maybe, shall we say, we've had a web chat which goes round and round in circles. You don't get where you want to be, and you don't even know how to get out of it in the end. We don't want to get into a space like that in terms of the client interaction. But where we can and where we do think it adds value and where it improves our accuracy or at least matches it, then we'll certainly implement it.
Thank you. I'm conscious of time, so just a final question for both of you before we wrap up this episode, and that is that we started the episode, Haydn, with you talking about having a positive frame of mind about the outlook for 2026. In summary, then, I'll ask you both, what is your overarching view of what we can expect over the next few months in terms of the outlook for the teams that you support and also the customers that they support? Haydn, I'll start with you.
I think it will be a year which starts us on the road to people realizing that the quality over quantity sometimes is the most important thing, and quality advisors and the quality of advice and interaction and client focus will start to rise to the top, I think, across the industry. So you'll see better quality firms getting stronger and growing, and better quality advisors building stronger businesses in their own right. And those who are maybe more transactional and from the sort of past of brokering, I think you'll start to see the demise and certainly a reduction in their impact in the market. So I think it's the 2026, the year of quality.
And Kevin, how would you summarize the outlook for the commercial finance market as we start the year?
Yeah, after a subdued half two to 2025, I think it's a positive outlook for the reasons I articulated earlier on: availability of capital, lender appetite, positive rates. So for those entrepreneurs that are strong enough and bold enough to take investment decisions, I think it will be a year of growth and a very strong foundation for them to springboard on in future years. For those who defer and put off the investment decisions, they will continue probably in a zombie state, or dare I say it, may well even start to see their turnover and profitability reduced to the extent that they may potentially be going out of business. So I would be actively encouraging entrepreneurs to take the bold decisions, to take the investment decisions, and take advantage of the undoubted opportunities that will exist out there through 2026.
Thank you to my guests, to Haydn Thomas and Kevin Morgan, and thank you for listening to this episode of the Cornerstone Finance Group podcast.